Contributed capital. We're going to finally have a corporation buy its own stock back. And you'll recall that's called treasury stock. And when a company buys its own stock back, it pays whatever the market is charging at the time. So in this instance, and we're doing exercise 13, we're going to, on May 5th, buy 800 shares of our own stock at $20 a share. Now, our own stock, the stock, has a par value of $2, so just keep that in mind. But that's thrown in there to confuse you, isn't it? So when I buy stock, I'm going to debit treasury stock, or T-stock, for 800 shares times $20, this cost, and I'm going to credit cash, because that's how much money I had to come up with. And 800 times 20 is $16,000. So debit treasury stock, credit cash, $16,000. The second instance says we're going to sell our treasury stock back out on the open market at more than what we paid, in other words, for $22. So we're going to sell 300 of these 800 shares at $22. Well, if I do that, I'm going to be debiting cash. Well, how much cash did I get? 300 shares times $22. I'm going to skip a line, and I'm going to credit treasury stock for the 300 shares times my cost. And what did I pay for it? $20. So as you can see, this entry is not going to balance. Who comes to your rescue? You got it, paid in capital. And notice that to make this entry balance, I need to credit paid in capital for the difference. So the pink plug comes to your rescue one more time. So let's put in the numbers. We're going to be debiting cash for $6,600. We're going to be crediting treasury stock for $6,000. And we're paid in capital, fabulous plug is $600. So that's what we would do if we sold it for more than its cost. On May 21st, we're going to sell it exactly at its cost. So what will we do there? Well, I'm going to debit cash. How much cash did I get? 200 shares. Sold them for $20, so that's $4,000. And I'm going to credit treasury stock at its cost, and those 200 shares cost me $20 or $4,000. So notice we break even. No paid in capital in this one. Finally, on May 28th, we sell the rest of the shares of stock at less than what we paid for them. So what's going to happen? Well, I'm going to debit cash for, let's see, I sold the remaining 300 shares at $19 a share. That doesn't balance. We're going to skip a line and credit treasury stock for the 300 shares at its cost, which was $20. And this isn't going to balance, is it? I'm going to need a debit. Guess who comes to our rescue again? Paid in capital. So in this case, I'm going to be debiting paid in capital for the difference. So 300 times 19 is $5,700. 300 times 20 is $6,000. And notice I'm going to be debiting paid in capital for the difference of $300. And that is how you handle treasury stock, the buying, acquiring, and reselling of treasury stock.